Yeah, no kidding. That's really interesting. And when you said that, that was my first thought too. Is what would be the benefit of bringing AI into the beauty industry? And I'd imagine actually that there could be quite a bit of benefits with niching down your products into very specific, like skin tones, for example, where somebody could upload a picture of their face. The AI generates a custom palette of makeup based on your exact skin tones. So that is going to be a really interesting one to watch. I mean, that's one example I just thought of off the cuff. I'm sure they've got a whole team thinking about what they could do for this. Even if the AI is just simply going to be something that makes their website dynamically update and show you different things based on your customer profile. That's a pretty standard e-commerce play right now.
Yeah,
Um,
unique way to think about that. I'd be curious from a technical standpoint how the stock looks, just because they do seem to be priced pretty, relative to the overall beauty space. They are priced nicely.
Yeah, no, they are really interesting. So this was fascinating. I went back to look at the long term chart. We've got just this mountain here where I mean this is the post well this actually
COVID.
looks like they had the post COVID rally all the way up to 374 and then the 2 year sell off that well the 1 year sell off that's where everybody was selling off for about a year and a half. What's interesting is Estee Lauder did not rally with the rest of the market. They just continued to sell off. So that to me is uh, is very interesting as a potential dip. And we've got this long-term support sitting here at about $120 per share. You can see this goes back all the way to 2018. There were a few dips that got caught right around 120 bucks a share before moving on up. And then we've got a long-term resistance. You can see this was their high back in 2018 and then also acted as resistance later in 2018 of about $150 per share. So I'd say if I were to play this one, what I would do is I would wait a little bit longer to see if this base continues to hold. That's how I like to play these ones. I like to wait to see if something's basing, and then as it starts moving up off of the base, that's where I'm going to start getting in the play and playing it to the upside. Um, if this 120 breaks down below and holds below for any significant time, then you might have to go back and look at some other indicators. But so far, it's looking pretty good. I mean, it's based here for about a week now. So any type of strong move up off of this base, and I think it starts running up to at least maybe some of these short-term resistances around 140, if not 150, 155.
So the last note I'll make on Estee Lauder, which is interesting, going back to our fundamental theme today of price to earning ratios and how to use these and how to think about them. And those are more of the off the hip. Let's just do a quick litmus test to see how things are operating in their space. They have a very high price to earning ratio. So they're sitting
Hmm.
around like a 69x. And relative to the space, which it's tough because there's not too much that operates in the direct beauty space. So that's always an issue as far as running comparables would be. But you have Elf Beauty, ELF Beauty, stock ticker
Oh
Elf.
my
They're
gosh.
trading they're trading around an 80x. So when you're trying to compare these, and then you're trying to bring in some of the other ones, Procter and Gamble, which it's not a true play, but they do have their beauty segment, and they have some of the other ones. They seem to be very high priced, and that just may simply be, that's what beauty space is. We'd have to look at a longer outlook on that. If you
Right.
guys want us to do another video on that, please let us know. We can spin one off. As far as what the price to earning ratios look like in specific sectors, you guys can make suggestions on, hey, I would love to see what this looks like, and we can, dive into the technicals. But looking at that from a long-term standpoint, you may want to listen to what was said on the technical component. This may be a, hey, observe and watch, and if there's a good entry that you think that you could take advantage of, have at it. Um, this may be one more of that is fun to watch. Then let's get active in it.
Yeah, Elf is such a funny one to me, and I chuckle at it because let me just zoom into the chart and cut out this most recent. So I started looking at Elf about when the chart looked like this. And so I had seen that it had gone up from about $23 a share up to over $100 a share. And I thought, surely this is a good opportunity to short some Elf. And so I shorted through some bear call spreads. So that's where you both sell and buy a call simultaneously to obtain credit. So I'll show you an example, right? It would be if I wanted to short it right now, what I would do with a bear call spread is I would sell these call 185s and then I would buy maybe these call 190s and I'd be receiving a credit of $185 for that. And if those calls expire worthless, I just keep that money. But you can see here if the trade goes against me, I've got to pay the difference between the strike and the credit received. So right now the credit's 230, the strike is a difference of 5, so you'd take $500 minus $230. Not 320, 230, and that would be your maximum loss. So you have a maximum loss on that of $270, because if the price goes up, since I sold this call, I'm responsible for giving somebody 100 shares at $185 a share. But since I purchased this call, of course, that limits my my max loss. So I started thinking, oh, it's a good short here, and I just got hosed. Or maybe it was a little bit sooner than that even. I remember just getting hosed and eventually just calling it quits. Then they did have a little bit of a mini dip, and then they just rocketed again. So the beauty industry is a phenomenal mystery to me. I'll just say that I did not understand why ELF was trading at such a massively high P to E ratio, and I thought for sure this is a good opportunity to get in and find the dip. There have been a couple dip opportunities, but man, they have been hard to time, and unless you were very patient with it, again, the way that I think that you play this is you look for some sort of potential double top indicator and then look for weakness on the way back down, because if you look at these rallies, for the most part they did not give many dip opportunities at all. They just kept going and going and going, and then finally they'd have a small little dip like this before just rocketing right back up.
Yeah, I think that takes us into one of the last, summer-ish type stocks that we would like to look at is Texas Roadhouse. And that's an interesting one because their stock has just really taken off recently. And that's due to a couple different things. They've increased their dividend for 3 consecutive years. They've had several analysts, I think 20 plus analysts, increase their favorable outlook on the security. Looking at it from a pure market standpoint, the CEO came out in I think it was February, and he was really pumping these guys up on great, tremendous start of the 2024 year. Market trend shows that these guys have been held pretty consistent even when there was some volatility, and there's been really positive market segment or stock around it since the beginning of the year. I think it's 24-25%. I'll let you jump more into that because their quarter one revenue reporting was 1.32 billion.
Wow.
So it's up almost 13% year over year. I mean, it's interesting because you have a single restaurant that falls underneath this, and there's 2 other spin-offs, just like the Carl's Jr., Hardee's type situation, depending on where you are in the United States. Same situation with Texas Roadhouse. They only have one main flagship restaurant underneath the stock, whereas if you look at another one of these types of stocks, like the Bloomin' Brands, which I'd love to talk a little bit more
What's
in
their
its
ticker?
relationship. Yeah, Bloomin' is, let me grab that one for you. If you want to pull up Texas Roadhouse, we can talk about that and then segue into
Yep.
Bloomin'. Bloomin' is BLMN, stock
Okay.
ticker BLMN. And an interesting note on those guys is management has been aggressively buying shares back. So the stock's been coming down pretty heavily over the last 3 months. The RSI actually suggests that it's probably in the oversold territory, which I'll let you get more into the technicals. And so it's sitting around a $20 per stock or $20 per share value, with management buying up a ton with the suggestion that it may be oversold. We'd have to take a look at the PE ratio and how it's doing relative to the space. But I do know relative to Texas Roadhouse, that may be an option if you've missed, the quote Texas Roadhouse rally, maybe another suitable option, because these guys actually own a bundle of restaurants. They own things, Fleming's. I think they own Bonefish. They own what's the other one? The Outback Steakhouse. They own several things. So you don't just have one concentration of restaurants.
Yeah, fascinating. Yeah, I mean Texas Roadhouse being at all-time highs from a technical perspective, it's just you're waiting for a dip, right? If you want to play it and think it's going to continue to go up, you're going to wait for a dip down to. I like using anchored VWAP. Some people like using like the 50-day SMA, something like that. But Bloomin' actually looks really interesting because we've got this massive. Check this out. Look at this massive multi-year channel, all the way back here till. I mean, really, you could extend this back to 2013. The price has just bumped between $16 and $25 a share over and over and over. Here's the COVID dip, and then here's the post-COVID super rally. But other than that, we had a little bit of a bounce outside of it the last couple of years, and now we're sitting right back in that channel again. So I would say that under 17 and a half, this seems like an excellent opportunity to get in for a swing trade. Even right now, I wouldn't count it out as potentially starting to try to form a new channel with the upper channel increasing, so the lower side of the channel and the upper side of the channel increasing. But unless it started basing here and moving back up, I wouldn't get in. I'd wait for something to move a little bit lower, start coming in around this 17.5, maybe 16.5 if you wanted to play an extra safe range, because you can see there hasn't even been a base that's formed yet. We've just got this sell-off, no base forming, so unless some kind of news came out that caused the price to rocket back higher, I could very much see this kind of bouncing up and down, right back down into this $16.5, $16 range. That, though, looks like a really excellent buying opportunity. And then look at that dividend, too. They're paying 24 cents per share per quarter, sitting at $20 a share. So that's not a bad dividend if you do the math on that, right? What is that? 0.24 times 4. Divide that by, we'll just call it at $20 a share right now. You're getting almost a 5% dividend. All right, well, moving on next, we've got GameStop is one of the last ones we wanted to go over this morning, and I know we saved the most interesting for last. If you guys have been following along, we've updated some things on GameStop trade that have been quite interesting. So the most recent news here, this is just hilarious. GameStop moved yesterday from about $45 at close all the way up to $67 before, well, I think it sold off just a little bit right before trading closed and extended hours. This morning, they reported earnings, and in addition to that, they reported an at-the-market offering of, I believe, 75 million shares. So what that means is GameStop now has the option to sell up to 75 million shares in order to raise funds for ongoing business operations. And I think in their last two statements, they specifically mentioned for mergers and acquisitions. So that's kind of interesting to think that GameStop might be looking at buying out some or buying up some complementary businesses to add to its its transformation into where it used to be mostly a physical location for people to go and buy games, and now they're getting more into the esports world, and they've been looking at what I thought was the most interesting is they were looking at transforming many of their GameStop locations into like LAN centers where gamers could come together and just like in a group together and all in one place go and play whatever game you'd wanted to play. So that's an interesting potential transformation. I think the stock's actually halted right now. It looks like stock's halted right now. So it looks like it opened, probably halted up, sold off, and now it's halted down. Classic for GameStop to see these kind of halts. What we've been doing with this trade what I did is I bought 300 shares after this rally here, and I bought the shares. This line right here, this green line, represents my original cost basis, 34.55. And then I immediately turned around and sold covered calls. I sold 3 covered calls for about a total of $2,200 in premium. And then I bought those covered calls back right around here. I meant to buy all 3 back. I only ended up buying 2 because one of the orders didn't fill, and I didn't realize it. But what happened is that when I bought them back, I had to pay a little bit of premium extra. And then yesterday I sold some more calls again during this rally. I didn't time the highest of the rally, but I sold it pretty good. So what that's done is that's brought my cost basis down to this green line here. 25.09. So I've got 300 shares of GameStop, and if GameStop dropped all the way down to 25.09, I'd be break even on the trade. These dashed lines here represent the 2 calls that I've currently sold, the strike prices. This one expires on Friday. This one expires about a month from now. And so I'll be forced to sell 100 shares of GameStop at $40 a share and 100 at $70 a share if it's at those prices before expiration. Now, I'm happy to do that because it's a phenomenal trade to get in here at 35.5, sell at 40, sell at 70, and then I've got 100 shares on running to the end. But what's so interesting about this is the reasons behind the rally. We've got Roaring Kitty, who's been posting recently on Twitter and Reddit again about his position, and I think the last I saw yesterday was that if GameStop opened above $65 a share today, his position would be worth over $1 billion. Now, this guy, what's remarkable is the first time he was in GameStop, he turned $50,000 into about $50 million, something like that. That was his trade, and he had gotten in and on the idea that GameStop was being undervalued, and that the 140% short interest was indicative of a short squeeze. And then Ryan Cohen comes in, Michael Burry comes in, all these other people come in, and it just rockets the price up to what was it, pre-stock split, this was almost $500 a share. They did a 4-for-1 stock split, so it looks like 120 now, but it went from whatever it was at, $2 up to almost $500 a share. And then he disappears for 3 years after that. He says on his live streams, he's like, hey guys, I'm going to go spend some time with my family, figure out what I want to do with my life. Disappears for 3 years, comes back 3 weeks ago with an absolute war chest, and he announced that that's what caused, I believe, this spike right here is when he posted his position. And his position is something like 5 million shares of GameStop plus 120,000 call contracts with a strike price of $20 per share that expire, I think it's like 2 or 3 weeks from now. So the overall position was worth a couple $100 million. At $65 a share or above, he becomes a GameStop billionaire, which is just absolutely wild to see.
Yeah, and interesting what's going on there. And it's interesting from a GameStop standpoint. You had mentioned the acquisitions, and I love seeing what goes on in the acquisition market. I haven't seen too much activity from these guys in probably a decade. I mean, back in the 08 to about 2015 era, they were picking up companies left and right. They grabbed an Ireland company. They grabbed a few other companies that were specifically doing game design, development, things of that nature. 2015, they grabbed 2 companies that also did that. I haven't seen too much activity there. It would be nice to see what these guys are planning on doing in the space. Talking about this, and we don't need to spend too much time, but looking at how the gaming industry has had acquisitions play. You have the huge acquisition of Microsoft into Activision Blizzard,
Right.
which was actually the largest of its time and era. I think it was almost $70 billion, something just absolutely crazy.
Yep.
And it's going to be tough to replicate. The problem that a lot of people that are ears to the ground in the gaming industry are concerned about, and these are not just your average gamers, these are people that are truly paying attention to what's happening and the dynamics of it, is that since there's going to be consolidation in the gaming space, that there's going to also be consolidation or impact to the creativity of the game. So when you have all these boutiques, or you have all these sunshine type outfits that are putting out one-hit wonders, if you consolidate all that and you bring it underneath one house and one management team and one design group, you're going to have just this non-unique, more uniform style of gameplay that's not creative. And so that is just something interesting to think about. This is more just on pure speculation of the market.
Yeah.
Might be a nice segue for next week or the following week to look at, hey, how does GameStop impact other gaming outfits? Because there are quite a few publicly traded gaming companies that are still out in the marketplace.
Yeah, that is really interesting. I know a few weeks ago we talked about Unity Software, and I actually haven't looked at it since then. I entered a small position and then actually sold my position when it popped a couple percent because I wasn't liking it. But check this out. Now we're down at almost, $17.50 per share for Unity. The reason that I was so interested in Unity actually was because of a YouTube video by a popular, that's our website, not YouTube, youtube.com. Popular streamer Asmongold. I don't know if you've ever heard of him. This just popped up on my feed, I think, because I watch a lot of Shark Tank videos. And he said, we created a Shark Tank for video games, I think is what the title of it was. Yeah, we hosted a Shark Tank for video games. They've done a few of these now, it looks like. And so basically this dude is multi-millionaire because he streams World of Warcraft and other video games, and he's one of the top gaming streamers out there. And what he started doing was he got, I don't know the other people that he was doing this with, but they would come in, they'd all throw 20K, 30K in, whatever, and they would let people that were building indie video games come on their show and pitch them, hey, I need 5K, I need 20K, and this is what we're going to use it for. They would play the game with them, do a little demo of the game, and then decide whether or not to invest in that. And I think rather than like invest for rights or shares in the company, they literally just gave them cash for free to promote the indie gaming industry. And that's one of the reasons I got so interested in Unity, is because almost every single person in the video that was developing a game is saying, yeah, I'm making it with Unity. I'm making it with Unity. And so I'm like, that's really interesting. If Unity's
Yeah.
the premier indie gaming place, if you want to build an indie game, then as you get this bigger consolidation with the big gaming industries all being bought up, AAA games all being bought up by Microsoft and whoever else, and you have that lack of diversity, I think there's going to be a massive surge of people that start developing indie video games as that counterculture movement to say, hey, we want something else, we want something unique, we want something better.
Yeah, love it. Interesting plays that's going to happen in that, and it'll be interesting to see moving forward in all landscapes how these impact not only the gaming industry, but other small industries. Because that Shark Tank idea probably will catch on. I mean, you could see that easily in the beauty space, or in the
Yep.
home improvement space, or in any of these other spaces where you have these fly by night shops that are going to go and start challenging places like Home Depot or Lowe's or any of these other large box retailers and stating, hey, we saw this idea. We're going to sell it on our exclusive online store, which you are starting to see that pick up in the marketplace. These global online shops that are rivaling, you know, Walmart or
Right.
Target or some of these other places. So,
Yeah.
good to know.
Yeah, for sure. So last thing we're going to go over real quick before we close today's, we had a viewer ask for an update on GPS. This is one that I had talked about prior to their earnings, and I said once I saw the earnings spike that I likely thought this was a good short candidate, and it looks like it's moving on back down. As expected, there were two potential resistance zones. One was right here at $28 with the previous or the most recent high. Then we had another long-term, let me move this out so you can see this, right? Long-term resistance based on these prior tops back here, and you can see that it's respected that pretty good. We popped just above 30 for a little bit, had a nice sell-off 1, 2, 3, 4 days in a row. Maybe going to stop selling off now and start basing again. You can see there's some short-term support for that here as well, where this initial, let's see, let me pull this a few more days forward. Let's go 10 days. There we go. So after earnings, we had this initial, when market opened, initial sell-off came right down here to about the $25 zone. That's what we're seeing now before this small move back up. I wouldn't be surprised to see a little bit of a rally off of here before a continued sell-off. I also wouldn't be surprised to see it continue to sell off. So if I had shorted this position, which I ended up not, I wanted to put my cash elsewhere, but if I had, and I was profitable right now, I would definitely have a trailing stop on my position or some sort of limit to, if make sure I capitalize on my profits. Like, let's just say I shorted here right at 28. Well, I've got a nice profit of $2 per share short, and so as it moves back up to like 27, that'd probably be my stop, or I say I'm going to just cut there, keep my profits, and move on to the next trade. Overall, though, if it continues, and that's why I do a trailing stop, right? A trailing stop gives you the option where if it keeps on moving down, then that stop follows you all the way down. Because I don't see any reason why we couldn't see something just like this tower here, where it sells off, kind of falters after a little bit, and then another big wave of selling for about a month. But nothing's guaranteed in the market; could go either way. So always got to protect those gains. Thanks for tuning in, everybody. Hope you enjoyed the first live stream. We'll be doing these every Friday, or most every Friday, sometimes Thursdays if the market's closed on Friday.